Today's podcast is brought to you by Precious Metals Advisor Tom Cloud. With nearly 40 years' experience in the precious metals industry, Tom Cloud offers sound advice and the best rates on precious metals. Learn more at ftmdaily.com/gold.
Friends, welcome to the Thursday edition of Follow the Money Daily. This is a daily podcast dedicated to your personal, spiritual, and financial liberty. Right here every single weekday on followthemoneydaily.com. That's ftmdaily.com. I'm your host, Jerry Robinson, author of the book Bankruptcy of Our Nation, and your guide, leading you on an excursion to truth right here every single weekday on this podcast. As always, I'm joined by my lovely co-host, wife, and national director of the Christian Financial Advisor Network, Jennifer. Great to have you this morning.
Thanks, Jerry. Well, it is very true that we want you to have the knowledge and we want you to have a good understanding of the way this economic system and this money system works. So not so you can get very depressed about how dire the situation is, but so that you can make wise decisions and prepare for even more difficult economic times ahead.
That's why I'm so proud of what we've done here. I got to be honest with you, because when you go out into the blogosphere, if you go out into the web and you begin looking up things about the economy, or you begin looking things about money, first of all, I've seen really two extremes. One is I see people who have no idea about anything about economics, and yet they're armchair economists, right? They know everything about economics. They're telling you what's going to happen. They're telling you why the dollar is going to crash, and they don't even know what a currency is. I mean, they don't even know the difference between currency and money, okay? But they're experts on the dollar is going to collapse because I guess they heard it somewhere. Then you have, on the other extreme, people who do know economics, and they're using their knowledge to scare the pants off of people. I'm talking really, I mean, because we see some of the emails and phone calls that come in here. People are scared. And before anyone says, well, Jerry, you don't know how bad it is. Well, I wrote a book called Bankruptcy of Our Nation. Okay, I get it. I mean, I know we're bankrupt, man. I mean, that's what I say over and over again. We're bankrupt. However, there is this middle ground that Jennifer just talked about where you do have a moment where you wake up on the Titanic. There is that moment where you wake up on the Titanic and you begin to realize, I probably need to get off this ship. I probably need to get a lifeboat and get off this ship, right? And that's really what this program is. It's designed to help you understand that, yes, the Titanic is in an iceberg. Yes, there are problems. Yes, it's going to be bad, okay? But you have time to make some good, positive changes in your life. So let's make those changes now, right? And then let's not worry about all the spooky stuff, because we can't change any of that. Sure, we'll talk about it. Sure, we'll look at it. But the main thing is for you to take action. And I'm so happy that we have put out so much information on our website about things that people can do. So typically, if we'll have a headline, we always try to provide a solution with it. And if you go onto our website, you'll find things like the 5 levels of financial freedom, where Jennifer and I share with you through videos and through articles. And you can find that, by the way, at ftmdaily.com/5 levels. We share with you exactly what we have done in our own personal life to help you, find a way to perhaps decrease some of that debt, increase that savings, diversify those investments, get yourself to a place where you're highly diversified. And in fact, that's the topic of today's show. We're going to be talking about how to diversify your savings. So many times, people think of diversification and they instantly think of investments. And that's a good thing, because it's important to have diversified investments. Diversification is important because it's a wise principle. It prevents you from putting all your eggs in one basket. But there's another very important reason for it that many people miss. Some people will say you don't need to diversify because you just need to find something you're really good at and put all your money into it, like gold, or you need to put all your money into real estate. And business owners are this is their cardinal sin. Business owners who find that they can't get a better return on anything else in their business, they'll often plow a lot of their money into their business. And it makes sense because it gives them a good rate of return. But the problem is they are not diversified. They're all dependent. They're all in on that one business, And so I guess if they really carefully plan, they could probably protect themselves. But for the most part, it's best to have a lot of different asset classes in your life, gold and silver and real estate and stocks and your own business and other types of investment assets. So no doubt about it that diversification is important. But the other main reason is because the rules of the game can change. So you don't want to have all your money in gold or real estate, and then Congress gets together and says, you know what, all those tax benefits we have on real estate, we're just going to have to get rid of those because we need to pay for Social Security or Medicare or Medicaid, or we need to help this or we need to help that. Well, then you put all your money into real estate, and guess what happened? You got hosed. Could that happen? Yes. Will it happen? I don't know. That's why we don't put all of our money into real estate. That's the whole point.
It's the same idea with putting all of your retirement savings into a 401k plan at your work. What if the Congress decides to change the tax rules on 401ks? Right now, they're pretty tax advantageous. You get to defer the taxes until you pull the money out at retirement. But putting all of your retirement savings into any plan like a 401k is a little bit scary. Not because you think the bank's going to steal your money, although the bankers are pretty maniacal, but because the tax code could change, because our government is out of control. So this idea of diversification that we're going to talk about today is not only good for your investments, like we just said, but also for your savings. And we came across a story just the other day in the Wall Street Journal that said 1 out of 4 Americans today have no emergency savings. And why do you think that is, Jerry?
Well, there's probably a number of reasons. I mean, first of all, you look at the interest rates that the banks are paying, and so there's no incentive. They've been totally discouraged, the American public have, to save through the interest rates. But also, what's really interesting about this report, and it came out from the Wall Street Journal, it was a report from Bankrate.com. 26% of Americans have no emergency savings. Over the past 4 years, check this out, there has been little to no progress when it comes to American savings capacity. So we go through this massive crisis in 2008. We see a little bit of blip pop up in overall savings. And then it stagnates. And even people who have over $75,000, the report goes on to say, it's not just the middle class. I mean, people who have annual incomes over $75,000 and above, I mean, all the way up to, 6 figures, do not have enough savings either. Only 46% of them have enough savings to cover 6 months of expenses. So it's impacting everyone. And as to why they're not doing it, I think it has to do with poor financial education. It also has to do with low interest rates. There's no encouragement to save. Now, here at FTM Daily, we have designed something called the DSL Savings Plan, and it stands for D stands for diversified, S stands for 6 months, and L stands for liquid. So it's diversified 6-month liquid savings reserve. And that's really what this is. And so we take the same principle of diversifying your investments and we apply it to savings. And so we find that diversification works whether you're applying it to investments, savings, and the third thing we talk about with diversification is income. We talk about the need to have a diversified set of income streams coming into your life. We talk about multiple streams of income. So today we're going to focus on the savings diversification. If you want to learn more about this, by the way, you can go onto our website at ftmdaily.com/DSL. D as in diversified, S as in 6-month, and L as in liquid, DSL. And there you'll find not just some good information, but also a study we did. And the way we diversify our savings may be different from the way that you might choose to diversify yours, but we simply provide a guide as to how we've actually diversified our savings, and we've done it in thirds. 1/3 we placed into U.S. dollars, but you can't put all of your savings into U.S. dollars because, as we know, inflation is eating away at those dollars. So we take another third and we place it into what we call stable foreign currencies. These are currencies that do well when the dollar doesn't do so well. So it helps protect and insulate us from a declining dollar. And then the third area that we talk about and we put our savings into is gold and silver. And then we provide a back test. We actually did this back test on how this would have performed over a period of 5, 10, or even 20 years. And we found staggering results. You can read about them on the website at ftmdaily.com/DSL. But in other words, by diversifying our savings, we were able to dramatically, and this wasn't even our goal. We weren't trying to dramatically increase our return on our savings, but it actually did, because so many people don't realize how much their value of their dollar savings are going down because of this insidious inflation. And so just by diversifying it slightly, you begin to get a better return overall.
And Jerry, as a brief example of not diversifying your savings, if you would have kept all of your 6-month savings in just a regular, like a money market or a CD from 2007 to 2011, you would think with whatever the nominal interest rate was, even though it was low, that you would have earned money. But if you calculate inflation into that, you would have actually lost 5% of your purchasing power just keeping your savings in the bank over that time. Now, if you had, let's say you had held your 6-month savings over a 20-year period from 1992 to 2011, you would have actually made some money. You would have made 10% out of the interest minus inflation. But thinking about how inflation is going to be rising, as we just talked about last week, you really want to think about diversifying those savings in order to protect your purchasing power.
And if you go to the report that we talked about, ftmdaily.com/DSL, you'll see the report there, and you'll see that the money that, had you taken that money and actually placed it instead into a diversified reserve, in other words, you took 1/3 and put it into dollars, 1/3 put it into stable foreign currencies, 1/3 into precious metals. During that same time period, that 5-year time period from 2007 to 2011, your return on that was 54% after inflation. Now that sounds staggering, doesn't it? And that's not really the goal of savings. We're not trying to create those kinds of returns. That's not, what we're trying to do, but it shows you the power of diversifying your savings. I mean, if we go from 1992 to 2011, as Jennifer had just said, and you put your money, again, for that 20-year period into a non-diversified savings account, like just a straight-up savings account, you would have earned about a total of 10%. Had you done what we do and diversified your savings from 1992 to 2011, the return on that was 201%. Now, again, I'm not trying to entice you to do this simply for the returns, because who knows what the returns will be in the future. But you will see that when you backtest the strategy, you'll find that the diversification really helps your return overall on your savings.
And I know that most people understand what it means to hold physical gold and silver as part of the third, or as 1/3 of the savings. But Jerry, when you say stable foreign currencies, I mean, all currencies for that matter in the world are fiat, right? Just like the dollar, they're not backed up by anything. So what do you mean when you say stable foreign currencies with 1/3 of your savings?
Well, when I say stable foreign currencies, it almost sounds like a misnomer, or it almost sounds like an oxymoron, because in this current environment, they're all fiat. So when I say stable, I'm talking about the kind of currencies that you're not afraid to hold. I don't think anybody here in the United States is afraid to get a paycheck that is denominated in U.S. dollars, right? If they get paid from their employer and it says, the paycheck says $2,000, they're not thinking to themselves, oh my gosh, I have got to get down to the bank and change this out to euros, right? Or I have to get down and I have to change it out to Zimbabwe currency. That never even enters their mind. They just think, I've got to put this in the bank, right? So, but people in Canada are the same way, right? They're not thinking to themselves, oh my gosh, I got Canadian money and I've got to rush and I've got to go get this into dollars. It's not what they think. It's a stable currency. So what about in Britain? Do they have to rush out to take their paychecks and convert them to something else? No, the pound is strong. It's continuing to go up. We've been enjoying the pound's rise. What about the euro? Same thing. It's a stable foreign currency. So these currencies overall are going down against gold, but they're stable in the fact that they're not dropping like a rock. Okay. So in other words, what you want to do when it comes to finding stable foreign currencies is you want to find currencies that are going down at a slower pace than the United States dollar. Think about it as a bunch of boats on the sea. If you saw a bunch of similar sized boats on the water and each one of them had a quarter size hole in the bottom of them, well, they would all be sinking at the same rate. Well, what you want to do is you want to find the boat that has a smaller hole in the bottom than the dollar has. And, you know, that's why we created our global currency monitor. We monitor 9 different stable foreign currencies around the world every single month, and we provide the details on that to our FTM insiders. But think about foreign currencies as a seesaw. If the dollar goes down, well, it has to go down in relationship to some other currency, right? If you hear in the news that the euro went down, well, the euro had to go down against some other currency. They trade in pairs. And so all currencies are priced in a relative fashion. And our favorite way to gain access to foreign currencies for our savings is through ETFs. We choose to use ETFs. And if you're curious about the kind of ETFs we use, I think we provide some of that on that DSL page. But if we don't, I know for sure that it's in our FTM Insider area or for all of our global currency monitor folks.
There's also an interesting way to gain exposure to foreign currencies through an online bank called everbank.com. They have CDs and money market accounts in which you can actually get exposure to, I think it's close to 30 different foreign currencies or baskets of currencies. So you can look at that as well. We're not recommending Everbank. We just know that it exists and they do offer that unique product.
Yeah, we're not affiliated with the Everbank at all. And what we do with that final third is we put it into precious metals. We use gold and silver. We do half and half. We put half into gold, half into silver. We do physical metal on those. We don't do ETFs on that. You know, this is money that we don't want to put into ETFs as for gold and silver. I mean, those things already are maligned. There's already lots of problems with them. Concerns about there not being enough gold and silver, not enough metal, physical metal to back up those ETFs. And so we don't even fool with that. And when it comes to foreign currencies, it's just paper. It doesn't matter if I hold the euro in my hand or an ETF certificate in my hand. They both burn at the same rate, don't they? But if I have gold in my hand, a physical gold coin or a gold ETF certificate, guess which one burns up quicker, right? So I want that gold in my hand. But when it comes to foreign currencies, what do I care? Because it's all paper. So for that final third for our savings, we put it into gold. And I tell you what, I think also by diversifying your savings, it makes savings more fun. And I think that's also part of the reason why people don't save is it's boring, right? They don't want to save. They want to spend. I mean, they're told by the media, they're told by the mainstream media, they're told by the financial press. Everybody's saying spend, 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 and you'll be happy. But the truth of the matter is that you want to see somebody who's unhappy. You walk into Walmart and you see the 85-year-old person handing you the cart, and he's there because he has to work at 85 because he believed that he didn't need to save money. Okay. And that's where you do not want to end up. You don't want to walk around in life and not have an emergency fund. It's absolutely imperative. And now I know many people say to have 6 months of your expenses in savings. We don't teach that. We think that's not enough. We say 6 months of your income. So in this case, let's just assume that you earn $30,000 a year and your goal is to create this 6 months of liquid savings and you want to diversify it. So the very first step is to take your total amount of money that you earn, $30,000 a year, and cut it in half or 6 months. That means $15,000. You want to have $15,000 in your emergency reserve. And by the way, this is not just emergency money. You know, it's also an opportunity pool of capital. Cash is king at the crash. And the people who have money, whenever the market crashes, they're going to be able to walk out and buy things for pennies on the dollar, just like they did after the Great Depression. If you don't have a pile of cash sitting around to do that with, then you're going to be in a world of hurt. You'll miss out on great opportunities that you could have taken advantage of. So having that 6 months liquidity is vital, not just for emergencies, but also for opportunity. Now, let's say you want to mimic what we've done here. The way you would do it is you would take your $15,000 of savings, you'd save it, and you take 5,000 or 1/3 and put it into like a savings account or a money market account. The second third, you would buy some stable foreign currencies. And if you wanted to find out which currencies we like, you would purchase our global currency monitor. It's like $4.95 a month, or I think it's $49 a year. And there you can find out every month we send out a report showing you where, which of the currencies are our favorite at that moment. And then finally, you would take the final third, that final 5,000, and place it into physical gold and silver. That's how you would mimic what we do, and that's how you can mimic those returns that you've seen. That's exactly what we did. And so again, if you want to learn more about all that, you can certainly go to ftmdaily.com/DSL. We really want to get this information out because we want people to save. Saving should not be boring. It should be something that you do. And then once you begin saving, you never want to stop. So what happens after you have your 6 months liquidity? Well, then it's time to take all that savings that you're continuing to save every month and divert it now to your investing. And that's where you build your investment pool. And anytime you have to dip into your savings, anytime you have to dip into that emergency savings, you go back, you stop saving and investing, and you go save into your emergency account. And then once that's filled back up to 6 months, then you go back and you start investing again. So you're always saving every month, but you first fill up the savings bucket. And then once that's full, you begin to move it to the investment bucket. And anytime the savings bucket gets depleted or goes down a little bit, you stop, go back, fill it up, and then go back to investing again. But as I said, you can learn a whole lot more on our website. We also have information in our book, Bankruptcy of Our Nation, a whole chapter there on the diversified 6-month liquid savings reserve. All right, well, our good friend Tom Cloud is now back from a extended vacation over in southern Italy, and now he's ready to provide us with a big update on precious metals. Here with that is our good friend Tom Cloud.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, I'm back from Italy after 2 weeks and had a great time. And ever visit southern Italy, give me a call and I can tell you some enjoyable things to do. What I want to do today is, rather than talk about conjecture, is just talk about, to give our first review for the first half of the year, where we stand, and then we'll talk a little bit about what we expect. But I want to start off by saying, for the first 6 months of the year, we have seen gold up 9.3%. So we're on track to do over 18% for this year, almost exactly what I projected in January, 18 to 22%. And I still feel that will be what gold does this year. Silver is up 7.8%, with most of that coming the last few days, but it's made a quick run up and is now up 7.8% for the first 6 months of the year. Palladium has been the winner at 15.1, while the Dow has done 1.4 and NASDAQ 4.1. So all you read about and hear about is how great the stock market is, and yet Jerry's kept all of your listeners up to date on opportunities in the stock market, but certainly how much overpriced the market is by many different indicators. And yet, if you didn't live here and know what's going on, you would think that gold and silver are going down fast and stocks are going up, when it's actually absolutely the opposite. So once again, quick review: gold up 9.3, silver up 7.8, palladium up 15.1, Dow up 1.4, NASDAQ up 4.3 for the first 6 months of the year. There's still Monday left, and those numbers could change a little bit. We also heard earlier this week about the GDP being adjusted, where we were down 2.9% for the first quarter instead of the 1% that originally told us. This always happens when you have a bad quarter. They always wait until the end of the next quarter to tell you how bad it really was, because they don't want people to panic and move into bonds and metals. They want to keep you thinking the economy is improving. And now, of course, their big talk is, well, we had that horrendous weather, and that's it. In the second quarter, it's probably going to be a 4% growth. That'll put us back over 1% to the good when the second quarter figures start coming out. But once again, when you see those first numbers for the end of June starting toward the end of July, you'll know that by the end of September, those numbers will be adjusted down just like they have been continually for the last 4 years. So we do have an economic problem, and quantitative easing, while it's been cut back, it's a joke. We shouldn't have it at all. We're still printing $35 billion a month out of thin air, and we're being told like that's something good, and certainly it's not. But one of the companies that we follow very closely, Incrementum AG out of Liechtenstein, who is one of the few that can prove that they not only predicted the up moves in gold and silver, but they also predicted the down moves, not always to the exact percentage. But their report out on Wednesday is that they expect gold to be at $1,500 in less than a year. So what they're saying is within 12 months, gold will go up another 14% higher than it is right now for all the many fundamental issues that we'll talk about on a later show. But they were trying to hit facts and reports out there. To get you updated quickly on the Silver Fix, the London Silver Fix that ends on August 14th, there have been 7 different programs submitted to the London Price Exchange as to what, and they're now saying by July 14th, a month in advance, they will choose which of the 7 programs they will use for the London Fix. But while we haven't seen the things in detail, the important issue is that everybody in the world knows what the price fix is at the same time, and the good old boys and the money people don't have a 45-minute delay to go out and short the market or go long the market, taking advantage of the rest of us. And, of course, the lawsuits on that are really in high gear, and depositions are being taken, and all that works in our favor on the price. But we'll keep you updated on that. Sometime around the middle of July, we'll be able to look and see what the new product or the new way they will have a silver fix starting August 14th, 2014. So that's something we're watching. Since I last talked to you, we have somewhat affiliated with a timing service. Won't be talking about the name of it in our agreement with it, but I'll be able to pass along technical information to you from one of the top firms in the world that does timing. It's a very, very expensive service. You had to buy it, but I've worked out a deal where I'll be able to bring this information to you. But let me start with the stalker that so many of you are familiar with that have been around for many years. He's the world's largest gold and silver trader in London, and as all of you know, he's 75% in gold. And I did have an opportunity to talk to his main person while I was in Europe, and he's got 2 things he's watching. And as we tape this, we're a day away, so we don't know what's going to happen. But he is saying that if gold closes above 1326, he's putting his last quarter in, or this is the important thing for you, if it closes above 1300 on Monday, June the 30th. And the timing service that we're now affiliated with is saying the exact same thing. If gold holds and doesn't drop off on Monday the 30th and go below 1300, the pendulum swings up on gold, and they think it'll make a run to 1400 fairly quickly. And once again, you've got the Liechtenstein group talking about 1,500 or 14% higher within 12 months. On silver, it gets real interesting because we're all the way up over 21 now, and they're saying if it holds $20.50 an ounce on Monday the 30th and closes, then it'll also be a buy signal. But the stalker is all invested in silver already. He went in at $18.90 an ounce, as we reported on this show several weeks ago. So this is unique to see this kind of activity in the summertime. That's usually the lowest demand, and July is usually the least demand month. And yet last year we had a very good July, and it wouldn't surprise me to see that, because people don't want to wait until past August 14th. And also with what's going on in large deals being shopped, and that was my next point. It was reported last week that $1.6 billion of physical gold was purchased in London, and there's still conjecture that it was the Chinese central bank, and yet our sources have not been able to confirm who purchased it or not. But we're now seeing, shortages starting to develop as these large deals are priced or for delivery, and that's the most important thing. This is physical gold for delivery, not silver, but just gold. So where we think we are right now is things will start unfolding between June 30th and August 14th. We'll have a lot of information coming at us on the fundamental side economically. The geopolitical side, what's going on in Iran, Iraq, Israel, is certainly a lot less predictable, but it is something that will affect metals and have affected metals so far this year. That's been part of the reason metals have risen up. But just because palladium's up 15% the first 6 months of the year, don't think it doesn't have plenty of way to go, because remember, over the last 14 years, it gets about 60% of its profit the last 4 months of the year when the new car season is in. So watch very closely, and it's not too late to get into palladium, and we still think we'll see $1,000 palladium, if not this year, sometime in the first half of next year. So if any of you need to ask me any questions, you can reach me at 800-247-2812. That's 800-247-2812. Or you can get on our email blast list. We're not doing it this week, but we'll start back next week, and you can do that by going to ftmdaily.com and hitting the Precious Metals button. And we don't share your email address with anyone, completely confidential. If you don't like what you see, you can unsubscribe at any time, so there's no risk to signing up to get this information coming directly to you. As the summer unfolds, we do expect a lot of activity, and once again, we'll keep you updated on that. With this week's Precious Metals Market Update, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Jerry, the S&P 500 today is at 1956. Gold and silver both down slightly for the day. Gold at $13.18, while silver sits at $21.08.
Well, not too much of a surprise on the markets, the overall stock markets in America. I mean, in the summertime, we always hit these doldrums where volume dries up. Volume's been lower than what we've really wanted to see over the last several months and years, for that matter. But summertime, we normally have lower volume as usual, so not too much of a surprise what we're seeing in the markets. And it's holding above that 1950 level, again, on the S&P, which is a very key level to watch for those who are invested in this market. And as far as gold and silver, it's understandable. Gold has been ending weaker lately on some profit taking. People are excited to see gold and silver rebounding, and some people are taking the opportunity to exit, and that's completely normal. But we think that once that dries up, we're going to be left with nothing but people who are in this for the long haul. We're going to continue to see gold and silver move higher. All right, friends, well, that brings us to the end of our program. Thank you so much for choosing to allow me into your life each and every day right here on this podcast. And as always, I leave you with this final word, this time found in the book of Proverbs, chapter 17, verse 16, where it says, "Of what use is money in the hand of a fool, since he has no desire to get wisdom?" Friends, above all things, seek wisdom, and you will never be disappointed. Remember, when you want the truth about the global economy, just follow the money. We'll see you right back here again tomorrow. God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.